coming in at 93,565 or 93,566. Okay, so we're gonna say 95,66. Okay, and then we're gonna call this a breakout structure. Okay. And we have another breakout structure there. Okay, so now this level is looking more and more promising. Okay, very, very interesting level. And of course, we have our daily swing low there. Okay, we have an order block there. Okay, we can call this H4 bullish order block. Oops, H4. Okay, that does not work there. Okay. There we go. H4 bullish order block there is the last down close candle before the massive breakout structure. And we also have some imbalances that will have the case of price may find a reason to come back here. So what we can do is we can go now, we can go to the 1 hour time frame to see if we can see anything that we've missed. Okay, some more finer detail. And now we can actually see that on the 1 hour time frame here, we can actually see these lows nice and even, okay, relatively equal to each other. We see these highs that are relatively equal, and we see this level that's been broken out. Okay, so now we can actually refine our order block. So which was the candle, the last bearish candle before the big up move? We can actually refine it to this level here on the 1 hour. Okay, and we can actually remove this here instead of saying 4 hour. We can say 1 hour order block. Okay, so now we have that level. Okay, that will be interesting here. And we have the imbalance, and we have the relatively equal lows. So we have more than enough reason for the price to want to come down into this level here. It could come in here in reverse, could come in here, but we're looking for a high probability, so we want the market to come into that level there. So we have to be patient, guys, before we enter the trade. Okay, so let's look at the 15-minute time frame. Okay, let's reset this chart here. And 15-minute time frame. So we've got those levels mapped out, and we have it at the back of our mind. Okay. So here on the 15-minute time frame, we see our daily high here, right at the top, and we see we moving higher here, and then we change market structure. Okay. So we had that is the most obvious low there, which is more relevant to me. I'm gonna mark it out there, and we had a shift there. Okay. So we'll leave that there. 10-15. Change of character there. And we're gonna have a look here. The market then trades back down into this key level. See why this level is important on the higher time frame. We have massive rejection. Okay, market tried many times to pierce through this level and failed. Then rallied higher and then broke down. Okay, so if we really want to be very smart here, okay, so we can see we had the M15 chart, which is the change of character, and from higher highs and higher lows, we now make lower highs and lower lows. So the market has changed its dynamic to a small term downtrend on the 15-minute time frame. So let's have a look here. Let's mark at our time. Okay, we're gonna look at 12 midnight there. And let's go back here. Okay, 12 midnight there. Very good. Okay, so now we have a level here that is very interesting to us as well. Zoom in here. So what caused this massive breakout structure? Okay, so here it did not break, it actually rallied and then consolidated. Then we broke here. So we had a further break. Okay, so we had that level broken there. Our next low that is broken. Okay, so there's our lower low. Remember, high, then we had low, lower, high, and we broke down lower low here, lower high, lower low, etc. So we have a breakout structure right there. So we can go on settings, and we can say M15 breakout structure. So what causes breakout structure? So we look for the last up close candle, okay, which was that one there. And that is the cause of our breakout structure. So this was a chart, yes, because of this one big point, but this is not a valid chart because it didn't pierce through with much momentum. So I'll be focusing on this candle right here, okay? So we draw that in time, and we have that as our order block. This is going to be our bearish order block, okay? So the last up candle before the big move down. Okay, so remember we had in the back of our minds that we are looking for lower prices because we have relatively equal lows. We have a breakout structure here and a massive imbalance here. We have an order block. So we will be looking for bullishness, but we can be very nimble and trade this down to that level. Okay, so here we can actually look there. We can draw this out in time, and we see the market coming to this previous candle there. Could have had a limit order there with a stop loss above the high. Okay, and we could have targeted the next key swings, okay, which would have been here, right there, and that would have been our trade, a nice 5R trade, or we could have waited for a shift in market structure, okay. So if you want to be on the safe side, we could have went down to the 5-minute time frame, and we could have waited for the price to get to our order block. So here we can see we are creating higher highs and higher lows as we get into our order block. High, high, low, high, 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 low, higher high. Then we have higher low, and we failed to break the high, creating a new higher high, and we are in the zone. Then we break the previous low, creating a lower low and a lower high. Now we know that the market has shifted its dynamic, and we can actually now enter our sell. Okay, so if you use candlestick patterns as your entry trigger, this could have been your entry trigger at the close of this candle. I would have just went with this candle here. My stop loss would have been above the previous high within the order block on a 5-minute time frame, and that's how I would buy a cleaner, smoother entry, trade it right down there, and that is your 7R trade. Okay, and if you want to refine it even more, you can go down to the 3-minute or the 1-minute time frame. For interest sake, let's just look at the 1-minute time frame. Let's remove that there. And let's see if we can see something on the 1-minute time frame. Okay, guys. Okay, so same area that has been outlined as our order block. So we wait for price to come back into that area. Okay, and we see the market. Okay, let's just make it bigger. Okay, so low, higher high, higher low. We don't count this because we made a higher low there. So, and we made a higher high, and then higher low, lower high, equal low, lower high. That's the key one. So low, 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 and here is our lower low. Okay, we can actually see that there, and we wait for the pullback. Remember, okay, then we went lower, lower there, and we traded back into that area. Okay, so this was a bit choppy for the 1-minute time frame. Okay, so if you can get a clear entry on the 5-minute time frame, you don't have to go to the 1-minute time frame. But for interest sake, let's say we took the trade, we saw a lower low, a lower high, sorry, and a lower low. Then we anticipated here, we would have got stopped out at this level if we were short there, and we would have had our stop above the high. We would have lost that trade, right? Okay, that happens. Let's remove that there. So if we waited patiently for the price to get back to our level, and then used this displacements away from it, we could have actually entered here, and we lost one trade, no problem. We carry on following the structure. And how do we know this area is valid? When the price gets here, it did not break these highs, as you can see. Okay, as you can see, we had high there, high, high, high. As you can see, they're all going lower. It did not break any of these highs, did not break there, did not break there. So we can actually say that we are comfortable to take the trade there. Okay, and stop loss would go above the high. And then we would actually aim for our same target, which will be down here. And then that will give you a just about a 10.95 hour trade. Very simple, guys. So that's how we go into the very small time frames. But remember, we still have an overview of the larger time frames. So what I mean by that is, let's go back here, okay? Let's remove that there. And okay, so what I mean by that is, we could have taken that position and still held it, okay? So let's go back to the 5-minute time frame. And we could have taken some profits out at this level, okay? So let's say we enter there. With a limit order, we had our stop above the order block, okay? So this is on a 5-minute. Remember, we can get much more cleaner entries on the 1 minute and the 3 minutes if there is some structure that we can follow. And we can then take some profits off there, okay, and move our stop loss at our entry to have a risk-free trade. And then we can aim for these levels, okay? In there for those equal lows, and ultimately remember the higher time frame is an uptrend. We're just being very nimble and trading it down to a key level where we can then buy it back. Okay, so we can actually look at that level there, and this can give you a 19R trade. But let's dissect it even further. Okay, let's look here at the 1 minute where we found our entry. Okay. And our entry was here. Yes. Low. Let's look at that. We have our entry. Lower high, lower high, lower high, lower high. Our entry was here as the price moved away after the third. One high, 1, 2, 3. After the lower high, stop loss could have been above the structure. And now we're only looking in terms of pips, very little, 3.6 pips. First target could have been here, giving you a 12-hour trade. You could have took some off and then manage your trade accordingly. As you see, we are running higher, but that's besides the point. I'm just trying to show you what we can do in these situations. So let's bring that here, and let's go to the 5 minutes so we can get some more data. And remember the levels that we've outlined. Here, we can actually look at these relatively equal lows where liquidity rests. And we can actually trade it all the way down if the market structure allows us to. And we can get our trade looking something like this. Very, very nice. So you don't need to, if you catch one of these trades, you don't need to trade every day. I personally only trade at least 3 times a week. Okay, so yes, sorry, not at least, at most 3 times a week. Yes, so I do not trade every day, and that's what your trade can look like. 43R if the market allows you to move down lower, but we do have that at the back of our minds because we've formulated a trade idea. Okay, we have an imbalance on our higher time frame. We have an order block that created that massive explosion of imbalance. We have relatively equal lows where we know liquidity is resting. We have a change of market structure at a daily swing high. We have a change of character. Then we have a 15-minute break of structure, and we look at the order block that broke that structure. The price then returns back to that order block and does a shift in market structure at that order block zone where we can enter. And that's where we enter right here, guys. And that is the strategy. Very, very interesting. It's going to take you some time to actually get used to it, but I suggest that you watch these videos over and over and also practice it on your trading platform as much as you can. So the more practice you do, the more better you can become at it, and how you manage your trades and emotions is very important. So keep that in mind. Thank you very much, guys, for watching this video. And that is the end of the course. I hope you enjoyed it, and I hope you find a lot of value in this and you become a profitable trader. Thank you. Signing out, Profiting Traders, where trading is a lifestyle.